Hey, this is Joe Graves with I Hate Buying Insurance. And in this video, video number 4 of the 2018 open enrollment season, we're going to talk about a health insurance portfolio. What does that exactly mean? Well, my analogy for the year is buying a house. Think about buying a house, one of the greatest purchases of your life, whether it's a small, medium, or large place, a condo, manufactured home, whatever it is, whatever size it is. Eventually you've got to put furniture in it. And any kind of home without furniture and appliances gets really uncomfortable really quick. Health insurance is the same way. You see, without major medical insurance is great, but there's a lot of holes in the coverage. Holes like when a client of mine suddenly needed an organ transplant. And because of the network and everything and how this stuff is done, at first the care had to be done at the University of Kentucky. And they live in Nashville. Traveling back and forth was expensive. Loss of job, loss of income. Had health insurance, but I know that the financial impact was devastating. Or a good friend of mine, what I would call misfit, kayaked all the time, really lean, could not tell she was what age she was, looks many years younger. Out of nowhere, double breast cancer. Misfit gets breast cancer. Because see, that's what happens, folks. Life is happening, and then all of a sudden, the rug is pulled out from under you. You go to sit down and there's no chair. That gets really uncomfortable. You fall on your bum. But it gets really uncomfortable when even though you have major medical insurance, and you're still possibly facing bankruptcy. The concept for the health insurance portfolio came out of the statistics. I was an econ major. I kind of like numbers and facts. And when I saw that 60% of all claims across the board from the carriers are related to accidents, well, I can insure accidents really quickly, really cheaply, guaranteed issue with a small supplemental plan. There's no reason to buy a $1,000 deductible to try to cover 3 broken fingers. And then when most of the claims, 69%, were related to the treatment of cancer, heart attack, and stroke, I saw we need to let major medical be major medical again, and then use supplemental plans to fill in the gaps in an affordable, practical way. So you either get sick or you get hurt. So the getting sick world, that's where the financial devastation comes. Because even with health insurance, this is a graphic from one of my companies. This is not a direct solicitation for that particular company. But it was a great graphic that showed that the math is there that 63% used up most of their savings, if not all of it. We had to get extra jobs, go into debt, borrow from friends and family, move in with somebody else, or get a roommate, or turn to charity. Although we had health insurance. We had a home with no furniture. Cost of getting hurt, same thing, happens more often. The dollars and cents aren't that high compared to like cancer. There's an affordable, easy way to fill in the high deductibles of today's Obamacare plans with reasonable supplemental plans for both critical illnesses and accidents. Because here you can see, use my mouse, if you want to go out and buy a gold plan for hundreds of dollars a month, you can get a really low deductible. But the price is sky high. So most of us have to go to the other end. We got to go to the higher deductibles to get the price down. That leaves us with a lot of red exposure area. So our philosophy, supplement it. Go with the high deductible health plans. Cut some fat off the meat to the major medical, the insurance that should be for paying for cancer, heart attack, stroke, blindness, paralysis, and all the big stuff, the expensive stuff. Then come in and fill in the gaps with these supplemental plans. And here's what a real case looked like this year. I had someone, because of their income, got a really good subsidy. To get a silver plan for under $200 is really good. They were on the lower end of the income scale and got a big fat subsidy. You could get a silver plan with you go, ooh, look at that low deductible. But in the last video, it's maximum out of pocket. Remember, that's the most important thing. $5,850. And yes, it did have office copays, but no dental, no chronic, no accident coverage. A broken arm is going to cost $5,850. My solution was going to a bronze plan, which had a much lower monthly premium than the silver. And then we came in and supplemented it with accident coverage, critical illness, life insurance, dental, a telemedicine program. So the accident plan takes care of a lot, if not all, of the out-of-pocket expenses. Critical illness for cancer, heart attack, stroke, etc., a big fat check. Life insurance in case one of these illnesses takes their life too soon. Chronic illness coverage, didn't kill them, but you can't do 2 activities of daily living, kind of like long-term care. There's coverage for that. Dental and telemedicine, all for $95. Because again, we put in a multiple benefit accident plan, a $50,000 critical illness, a $250,000 living benefits life insurance that covers all those things that are in the bubbles there. And when we put it together into a package, look at how much more you can get for less by adjusting the major medical that you buy. So maybe by changing the size of your home a little bit, we can fill it with furniture and appliances, and you walk away with a much better healthcare experience. It's Joe Graves with I Hate Buying Insurance. I'm going to build one of these custom health insurance portfolios for you and your family if there is one. Thank you so much for watching. Stay tuned for the next video.